Yo, what's going on, guys? Mark here. Today I'm going to bring you guys a video on harmonic patterns, more specifically in the bat pattern. I made a video earlier, but it was almost 45 minutes long, and I'm gonna try to make this one shorter and unedited, so it's just gonna be pure, no editing, because editing is just a pain in the butt, and I don't have time for that. So I'm just gonna cut right to it, show you guys how to spot the bat pattern, how I would trade it, where my entries would be, and so on and so forth. So let's get right into it. So for the bat pattern, or harmonics in general, you have 5 points. Alright. Can I enlarge this? 1 second. So the bat pattern traditionally, I think, or well, most people say, is it kind of looks like a bow tie shape, or just a bat shape. But I like to think of it as a bow tie, personally. Anyways, the bat pattern has a 50% retracement at the B point. Yeah, I'm going to need to make it bigger. So you have in the harmonic, you have the X point, the A point, the B point, the C point, and the D point. Now the most important points in the harmonics are the B point and the D point. Why? Well, the B point determines what kind of harmonic it will be. If I see 50% retracement at a B point, I'm already thinking bat or a shark. If it's a 618, I'm thinking, crab, gartley, blah 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 blah. Now the D point is what determines the reversal zone. You get for this bat pattern, the reversal zone at the D point is the 886 with the 1618 ABA. Now you might be thinking, what the heck is an ABA? Well, we'll get into that in a bit. So like I said, B point, D point, most important points in the harmonic, because that's what determines everything. C point is important too, but not as important as the B point and the D point. Now, how do you get the B point? Well, you measure from the X point to the A point, which is swing high to swing low. So on this example that I will have for you guys is your USD on a 4-hour, 1-hour time frame, but I'll be breaking it down entries on the 15-minute. Well, for the second entry. First entry can be an hourly, or will be an hourly. So let's just backtest this. We see that price has reached the 1.10 area and just made a nice push down, and is going to continue pushing down. And you should note that these 1,000 pip increments, such as 1.10, 1.000, 1.20, these are major psychological levels in the Forex market or in the currency market, and they're very strong support, resistance, or major key level areas. And not just 1.10, but 1.15, pretty much quarters. But that's another video for another day. Anyways, let's get right into it. Going off track. Price making, what seems to be a retracement upwards. Nice. So right here, first things first, this is our swing high, and this is our swing low, which is our high point, low point. This is what we take our Fibonacci. We take it from the wicks, always from the wicks. So let's just do that right now. So as we see here, that pattern, the B point is at 382 to 50%. Now I prefer personally 50% because that makes the reversal zone a lot tighter and smaller, which can, the pretty much the tighter the box or the smaller the box, the better it is, because if it's a wide box, then price can consolidate in that box and you can be in more drawdown because it's a wider range. But if it's a tighter range, then price can be bounce off that range more accurately and you can be in less drawdown. So 50% usually gives you a smaller box at the D point. So let's take our Fibonacci retracement from the swing high right here to the swing low. So we have our 618, 382 right now. Take off the 618 because we need a 382 or 50%. And as we see here, price wick to 50%, which makes it a 50% retracement. And yes, price can wick it. It can wick above it. It can even gap it. It does. It can gap the fib, or it can overlap the fib. It doesn't have to be a precise touch. And a lot of people might get confused on like, oh, what if it closed above it and then went down? But I like to see price, for it to be a successful retracement off a certain fib, I want to see price struggle near that fib and make a nice push down. And that's what we saw here. You see price wick to 50 and they made a nice push down, giving our C point. Now for the C point, we need a 382 to an 886. And we get that by measuring A to B. So what do? We go from the A point to the wick to the B point to the wick. So we can vary from a 382 to an 886. So we can go, it could be a 382, 50%, 618, 786, 886. And we see price. Let me zoom in here. Price with the 886 never closed below this low, and it never even closed below the 886. Just wicked it once, twice, 3 times, 4 times. So that's a successful 886 retracement. And this B point, 50% wick. I mean, if I see this and the low is not breaking, I'm already projecting a push to the 886 D point. Also, I'm measuring the D point for the bat pattern is the same way as measuring the B point because it's both X to A. So when you measure X to A and you see the 50% retracement, just throw up the 886 on there. And for the ABA, now to get the ABA 1618, you want to take out the trend-based fib extension. Now I don't know what trading platform you use to analyze your charts, but I use TradingView because it's really simple and it's clean, and I like to analyze my charts, nice and simple and clean, nothing major and confusing. So our trend-based fib extension. Remember, again, you take the Fibonacci's from wick to wick, and we see here that for the to get that second fib for the D point, because you need that second fib, it can't just be one fib. You get those 2 fibs and you draw a box around them, and that's how you get your reversal zone or potential reversal zone. So we see here it's an ABA. So we go from the A point to the wick, from this low to the B point, back to the A point. So it's A, B, A. You go from the A point to the B point, back to the A point, wick, 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 from wick to wick. And now we have, we have our reversal zone. So what I do, or what I like to do to make things, clean and simple, is draw a box from the 886 to the 1618 to get my reversal zone. So I'm just going to delete this 886 and 1618. because now I know that this is my reversal zone. You can leave off the fibs on there, but I like to take my fibs off because now I know that this is a potential bad pattern. So I like to keep this box on here, you know, nothing else, just naked charts. So the bad pattern is not yet confirmed. We will need a break above the 50%. So let me toss that 50% back on there. Ooh, went too far back. So for this to be a bad pattern confirmed, we will need a close above the 50%. So we're going to need price to push up and close above successfully. Not wicking it, a solid candle closing above the 50%. Then we should see price move up to this reversal zone, mess around this area, and get a push down. Right there, boom, confirmed. Look at that bull candle, just closed above the 50%. Straight, no stop. Closed above, bad pattern confirmed. Price is gonna push up till here. It's like a 90% chance. Super high probable that it's gonna push up to this major key level again. Price did a little correction, now it's pushing up. Boom. Now, this is where things get interesting, because this is where, you know, banks see this stuff too, but how should I even say this? The banks know how to mess around in the reversal zone. They know how to get you out of there. Now this right here, it barely wicked the 1618, which was our 88, and a lot of times harmonics, they tend to get so close to the D point and they just gap it barely. They barely touch it and they quote unquote push down, but it's considered a stop loss hunt because banks know this and they barely gap the reversal zone, and then they push it down to make the retail traders or the beginners or rookies, whatever you want to call them, to make them chase the trade. You know, they want them to feel left out, and this all goes back to psychology. They want the retail traders to think like, oh dang, you know, it barely gapped it. I don't want to miss this beautiful setup, so I'm gonna go in. You know, I'm gonna take it right now so I don't miss it. You know, they want to hop on the train to go short. But we know that, you know, price has to form some kind of reversal formation, as I mentioned earlier in the chat, or some kind of candle formation for it to go short. Harmonics, you can't just have one confirmation like, oh wow, it's a bad pattern. For me, I look at 3 to 4 confirmations, you know, whether it's like bearish engulfing candle, double top, head and shoulders formations. Now the head and shoulders formations form on the larger time frames like the dailies and weeklies, because head and shoulders are the rarest reversal patterns. Don't get that twisted, alright? People always be like, oh my god, head and shoulders, you know, 1 hour time frame. No. Head and shoulders is the most it's a misconception in the Forex market, but I'm gonna talk about that in another video, not in this one. So right here we see barely tapped, but there's no reversal formation yet, so we're still waiting, you know, to get our entry in. Push down, the retail traders are celebrating, they're like, oh heck yeah, you know, making money. Psych. I'm expecting a bull candle to just take everybody out. Right there. Boom. Right here. Perfect textbook. Price is in the reversal zone. Now, if you don't see the pattern, then let me just illustrate it. make that well. That's our bad pattern right there. Okay. So we see prices in the reversal zone, but see how it wicked it, but it never closed above it. Now can price now if you're questioning if price can close above the reversal zone, yes it can. Price can struggle like this, you know, it can hit stops, but we're looking for some kind of reversal formation and then a push down to our take profit areas. Now our take profit areas or take profit levels are Fibonacci retracements as well. You see here, TP, take profits, A to D point. And the Fibonacci that we will be using, the retracements, are the 382 and the 618. So what you want to do is take the fibs from the A point to the D point, which is 86, and throw in the 382 and 618 on there. And I'm going to draw a box around there so it could be a better visual. Put that in green. This is our take profit areas, take profit levels. Okay, so seeing that price close like this, wicked above the reversal zone but never closed above it, I would place an entry right here. So we have an entry right there. I would place an entry right here. I mean, the risk to reward is good. Where will my stop loss be? Above this high, above this first high. Usually, for harmonics on the 1 hour, 4 hour time frame, I like to put my stops around, 30 to 40 pips. So if we take an entry right here, our stop would be, let's just say 35 pips. But our reward would be, almost 90 pips, which is good. But the chances of price going all the way up here are very, very slim. So this is a high probable trade. So again, this would be my first entry right here at this reversal zone. Seems like we got our bearish engulfing candle here. Now, do I see a reversal formation? Not a candle reversal formation, but like a reversal, like a trend change? No, I do not. But again, I see a nice bearish candle and price closed in this reversal zone because it wicked here. So I already know price is going to be starting to struggle here. So again, we have an entry, this area. Bear with me guys, because this is my first video, so I know it might not be perfect, but try my best. Well, what do we have here? Looks like a double top formation to me. Would I enter again right here? No. My second entries, the harmonics, you could enter right here, but I like to enter a certain way, and that way is through the 100-day SMA breach. Now, what the heck is that? Well, a lot of institutional traders, they like to trade off the breach of the 100-day SMA. Not EMA, the SMA. So, pull it up right here. This is the 100-day SMA on the 1 hour time frame. But we're going to break it down to the 15-minute time frame. So we see price messing around here, here, but it's like messing around, like not a solid breach candle or a shift candle. Like we saw here, off the 100-day SMA, this was a beautiful shift candle, just busted right through it. And, price just took off after that. So right here, we're in the reversal zone, looks like from the double top. I am waiting for a solid bear candle to just bust through this 100-day SMA, and I'm getting another entry right after that candle closes. So again, this is the 100-day SMA. Oh wow, nice. The pace really taking everybody out in this one, huh? Oh yeah. Oh yeah. Price is messing around. Now for this quarter point, this is a quarter point. Again, this is a whole nother topic for another video, but if you'd like to learn more about quarter points, there's a book on quarter points called The Quarter Theory. You can find it on Amazon. Very good book, very insightful. It's more fundamentals, but a lot of information in there, so I definitely recommend to look through it or read it through. So from the 1.10, I like to see a 25 pip increment, which is, what's this at 2.5? So on this key level, price can overshoot 25 pips above or below it. So this is our overshoot area. So for the quarter point, price can mess around 25 pips below, 25 pips above this key level. So oftentimes you see with the quarters, it's not accurate. Like once price nears it, I'm gonna give you an example right now. I know this is a little bit off topic, but it's good to note this. Price doesn't have to be a specific bounce, price can overshoot it, mess around here, and then go down, or it can even undershoot under this key level and go down. But remember guys, for this, our stops are above the high. So right now, we're chilling. All the retail traders are getting emotional. They're like, oh my gosh, I'm pulling out. They're taking it up. But this is still somewhat, not somewhat, this is a double top formation, 100%. I wonder what it's like on the hour. Oh yeah, see, price is not closing above this high. It's wicking above this high. Price is wicking, but it's closing below this wick. So I still consider this a double top formation, 100%. Well, yeah, let's run that back for a second. Not there. 50-minute time frame. We're for sure getting our 100-day SMA breach within this hour. Nice wick. Right there. Price made a nice push down, correction, boom. This candle right here just obliterated right through the 100-day SMA. That's my second entry right there. So we have one entry above here, one more entry right there. Stop loss above the reversal zone, 35 pips. But we should be seeing price move down to this take profit area of 382 or the 382 level. right there. Take profit area reached. Bag is secured. Will price come down to the 618? Potentially, but price tends to not always hit the 618. 382 is almost guaranteed, but the 618 is a maybe. Why? Because oftentimes in harmonic patterns, if we're in an uptrend, we see this bad pattern, price can, make a strong push up, go down like we saw here, and it could mess around this area and continue going up, pretty much resetting the trend is what I like to call it. Now price is like making a move up. I'll show you right here. We see that bad pattern, see your retracement. So this is our bad pattern, right? This is an example, but in long term we're in an uptrend, so price can reset at the 382 and continue going up. Usually if it's at a peak formation high, like if the uptrend has been going on for a long time, we see the bad pattern, like that, or a crab pattern, whatever pattern it may be, and this is like on a daily, weekly, we see like a double top, or we see head and shoulders, then we know price is gonna be, the trend is changing and price will be going in the other direction. So most likely, go through all the fibs and just continue going down. But for me, I like to take my profits at the 382 level for pairs like these. But for more volatile pairs like GBP NZD or Euro NZD, those pairs will go crazy. They'll bust through the fibs like nothing. But for majors, I just like because the majors are more manipulated, so I just like to take my profits at that 382 fib. But yeah, guys, we had our entry off right here at the reversal zone, and we had another entry on that 382 breach right there. So off that second entry, secured at 55 pips. Ain't bad, but yeah, this harmonic's like on the 4-hour, 1-hour time frame. But again, this is like common sense. But the stronger the time frame, or the larger the time frame, the stronger the harmonic is. But for intradays, you can spot these harmonics almost everywhere on a day-to-day basis. Yeah, guys, thanks for tuning in. My next video will probably be on the crab pattern. If you guys are interested in watching that or listening to that, I'll put that one out as well. And maybe I'll make a video on quarter points or quarters theory, how I implement that with harmonics. Because oftentimes harmonics line up with the D point, or not the D point, harmonics line up at the quarter point, and that alone is a confirmation, because if it's at a major key level and you have a pattern on there, you're in. I'm in with a few lots, but yeah. Alright guys, thanks for tuning in. Hope you guys have a good one. Peace.